Good morning and welcome to the market forecast. Today is Thursday, July the 15th, payday. And as always, I appreciate you joining me. Thanks for trusting me with your time. My name is John Ogland. As always, we're going to look for accurate context, good risk management levels, and of course, patience. Patience is so important in trading. We say it all the time, it bears repeating daily. As far as economic numbers this morning, a whole lot of them already out, still more to come. As far as jobless claims are concerned, the initial jobless claims was expected at 360,000. It's exactly where it came out. Continuing jobless claims, however, were expected at a little over 3.3 million. Came out 3.241 million, 3,241,000. So a little bit better as far as the numbers for this week are concerned. However, there was a revision higher for both of them from last week. So we've got a little digestion to do that with regards to the initial hello, jobless claims. I just started speaking today. We also had Philly Fed come out at 7:30 Central this morning. That was a miss. The Empire State Manufacturing Index was a little bit better, and then import-export prices were what they were. 8:15, we've got industrial production. This is going to be a little bit more important, I think, in the coming days and weeks because there's a lot of question about supply chain. If industrial production starts to fall, it may fall on the supply chain issues that we've been having. 8:30 this morning, Central Time, Chairman Powell's testimony continues. And then, of course, we have the nat gas numbers at 9:30. Nat gas really doing some consolidation with cooler temperatures, with warmer temperatures, I should say, keeping everybody warm instead of the natural gas. As far as news is concerned, U.S. equity futures are looking lower this morning, early at least. Today, as Powell's testimony continues, still much data to digest. Powell's tone yesterday, largely dovish. Earnings out already this morning, most of them beating expectations, including United Health, Morgan Stanley, and U.S. Bancorp. Cryptos took a little punch in the chin yesterday as Chairman Powell has opened up the idea, I guess, to a digital dollar. So some of our cryptocurrencies taking a punch last night. As far as crude prices are concerned, even after a draw of almost 8 million barrels yesterday, announced by the EIA, we're lower because there was a surprise increase in gasoline supplies coming into the summer driving season. Also, we're still waiting for information from the OPEC Plus. We still don't really have anything defined as far as that is concerned. As always, hit the lucky like button and make sure you share, comment, question, feedback, and heckle at will. Subscribe to our YouTube channel. You get notifications when we do go live. Taking a quick look here at the VIX, up about 6% this morning. Feeling a little bit of pressure, I think, in our equities. 1735. The dollar index 92.55, and the 10-year yield continues to slip lower, 1.32%. All right. Got to say good morning to everyone. As always, if you're new to the market profile, welcome. Glad you're here. Theo, first in the room. You win the prize this morning, Theo. Brian, James, Bill, Richie, Caesar had something he wanted to say but decided not to say it. Algo Lover. I was looking at this comment before, and I agree. I think 43.60 is an extremely pivotal level. If we can maintain below it, we could see this market go lower. If we can't hold below it and we get back above it and reaccept, we could see this market heading higher. It's a very pivotal level for us this week. Good morning, Vince, Jorg, Algo Lover, Zerain, John, Deanna, Nicholas, Cesar. There he is. Good morning, all. Jim Wolf, Norman, good morning, sir. Lemur, hey, my brother Rick is here. Haven't seen you in a while, brother. It's good to see you. Love you. Jason, Jerry is awake, and hopefully John is too. Frederico, Tone, good morning. Tony, Good morning from San Antonio. Good morning, Tony. Andres, Laura, good morning. Rob T, good morning. Ryan Williams, Jerry is awake. Settlement price amazes me when looking at the NQ, the NASDAQ 30-minute chart. Murph, good morning. Happy trading, everyone. Yes. All right, so we've got crude oil below weekly kickoff level. We've got crude oil below a kind of a trend line that I've left on here because there's so many good touch points. And we've looked below this line before. We're going to take a look at that in the charts right now. Let's get in there and have a look. All right, so here's the daily crude oil. I'm still in August. I'm going to be trading. I'm going to be moving to September tomorrow. This morning, the volume was still greater in August. I'm going to stay in August. Tomorrow, we'll be looking at September numbers. So the EIA, almost a 7 million barrel draw. Gasoline, a million barrel boost. Hence, perhaps why this move is going in the opposite direction, as we would think, as supplies dwindle, price should go higher, right? Not necessarily always the case. This upside move has been very organized. I look back, I can't find a naked point of control until we get down to this level. Okay, so there's this move to the upside has covered all the short time frame levels that the market comes to try and come back to. We're going to have a move all the way down to, I think it was about 67.60, where this naked point of control comes in from all the way back on the 1st of June. We lost 37,000 in open interest overall. 47,000 of it was in the expiring contract, indicating that on this move to the downside in this test of weekly kickoff low yesterday, we added 10,000 in open interest. If you take out what we're losing in the expiring month, we added 10,000 in open interest on higher volume on a down day. It's going to be an interesting trading day for us today. It's kind of unusual for the market to become highly directional during rollover, especially on rollover day. But as we mentioned, it is entirely possible. It does and can happen. As a matter of fact, just about anything can and will usually happen. So below this weekly kickoff low here at 72.30, we're looking for almost a double breakout to the downside. We've got weekly kickoff and we've got this trend line. Now, focusing on this trend line just for a moment, we've got points of control all the way. There's so many points of control back here that I've left it on. We've looked down below it before. We looked down to it last week. We did not accept. If we accept now, last week's low is certainly a possibility for us to drive price to. What's the mood of the market? Let's take a look here at the 30-minute chart. So we've opened looking like we've left the opening range at the high of the regular trading hour session with no gap close early in the session. This is kind of a target-rich environment here. It's the weekly kickoff level. It was supportive yesterday. It got kind of walked through a few times last night. Settlement is all the way up here at 73.13. We have not been able to close the gap. Opening range, the high of the regular trading hour session indicates, hey, we've at least for now, we've got some sellers in this market, and we've got to pay attention to that. If we can't close this gap, we're going to be looking for opportunities to move this market lower. Last week's low right around 70.75 approximately, just by looking at this chart. And this is a visual target for the price to try and get to. Again, it was a very organized move to the upside. If we're going to be looking for the next naked point of control all the way down here at 67.60, that is a substantial move. Is it possible? Yes. Is it probable? There is a degree of probability to that possibility, but we're still waiting for OPEC to come out with something that they're going to be doing. I'm just going to be careful and trade what I see this morning. The opening range being the high of the session has me looking to sell strength as long as that remains. This area here, this weekly kickoff, even if we come and take out the high of the opening range, then we're dealing with possible acceptance of yesterday's value. If we can't accept in yesterday's value, I'm going to be continuing to look for opportunities to the short side. Acceptance inside yesterday's value is subjective, of course. It can happen very quickly. It can take all day for that to happen. But if we do, there's a probability of returning to the value high from yesterday, which is another substantial move. So we're looking at possible bigger moves today in crude oil, even though it's rollover. Take a look at the S&Ps now. Okay. I don't remember if we really pointed this out yesterday, but we had a reversal pattern on Tuesday, Wednesday, Thursday, Tuesday, reversal pattern. What is this in candlestick? It's a bearish engulfing pattern. Well, we just had one here, and the buyers came back and just bought this thing right back up. The market does seem to be, we always want to be asking ourselves, what direction is the market attempting to go? And it is attempting to go higher, but is it doing a good job becomes really the question. Is it doing a good job? Volumes are right. We lost 1,500 in open interest yesterday. We're not seeing any big boosts or drops in open interest. So the market is just kind of biding time here. It seems to be continuing to try and push higher, just not all that successfully. We've got, a high here. We've got a high here. We've got a high here. All of those were in regular trading hour sessions. The regular trading hours putting in gentle new highs, but not being very momentous in those moves. Upside auction seems to me to be tiring. Does that mean we're going to have a big drop? No. Could we just consolidate for a period of time? Absolutely. Point being is, we've had 3 days up above this weekly kickoff high. We didn't attract new business up there. Volume didn't pick up. Open interest didn't increase by any big means. So what's that tell us? It seems like people are waiting for somebody else to do something. Now, the night before last, we did add about 7,000 in open interest, but that was the day before last, I should say. That was on a down day. If that was an up day and we added open interest, I would say that buyers were coming into this market. It seems almost like sellers came into this market. They let it put in a new high yesterday, and then they took the market lower. Today, we're opening below that inflection level, that important inflection level that, who was it? It was Algo Lover that said, that's a pivotal level. If I'm going to be below that and we accept, we could go lower. If we're going to go above that and accept, we could go higher. Very pivotal level. Here we go. Here's the daily. The 30-minute chart. Settlement 43.67.75. The market looking to possibly open with a gap, without a gap. Not really sure what's going to happen here. We holding some overnight shorts here. That may give us an opportunity to come back to the target-rich area we were looking at yesterday with weekly kickoff low, value low from the previous day, settlement, and last week's high, all in the area. So this area, again, is going to be important for us today to one degree or another if it is approached. We've got some overnight longs here looking to perhaps reconcile those longs here coming into the open. There's fish, and those fish are here. Direction unknown, but there are definitely some fish in this weekly kickoff area, zone, whatever you want to call it. This whole area here is ripe for opportunity. All right. Take a look at the NASDAQ. Wow, 15,000. Who'd have thunk it? Resistance, big fat round number. Of course. We haven't even had a true bullseye touch. It hasn't happened yet. We've got our all-time highs in the overnight session again. We've got the market basically trading at settlement this morning. This is the 30-minute chart. Looking now into the daily, yeah, this market is holding the line all the way up. It's had 2 days of trying to creep up to that big fat round number, 15,000. Is the auction here tiring? Again, what direction is it attempting to go, and how good of a job is it doing getting there? Obviously, it's going higher. It's been doing a very good job. Is it beginning to tire? Is the question I am asking. It's been on the mind of traders for the last couple of weeks. I think is okay. When is the high going to be put in? I'm sure it's going to be a temporary high, but when are we going to see a pullback? When are we going to see a little relief break? When are we going to see some long liquidation? Some people taking some profits off the table. We haven't seen it yet. Is it kind of in the cards here? Looking at the way the market's been reacting this week, it does act to me, just to me, and I'm not saying that it's going to break or it's going to rally. It just seems to me that the auction to the upside has tired. We're going to need to relax a little bit, either have some sort of a pullback or a consolidation before this market can continue the move to the upside. Sometimes the market has to break in order to continue to rally. Again, just what I'm thinking, what I'm feeling, what I'm seeing. There is no finite yes or no answer in futures trading. Here's the 30. So again, no real overnight inventory. We're trading right at settlement. Last week's high here, we've got weekly kickoff high, big fat round number. Looks like we're going to be opening in range, outside of value, might offer opportunity. But again, because we're opening in range with no gap, I think it's going to tell me I'm going to try and relax and look for trade locations, better trade locations, as the day goes on. You can see yesterday, the market moved away, opened, moved right back to settlement. Okay, this is short time frame control. This is not longer time frame. We lost 2,200 in open interest yesterday. So there's no real barreling in of money in either direction at this point. It just seems to be waiting for information. So try and stay patient. Gold is a pickle here this morning for me. We have the daily. Okay, we had a pretty decent move to the upside yesterday. We added almost 10,000 in open interest. The volume wasn't all that great. The fact that we added the open interest is what I'm more interested in. We had a breakout of the basic range-bound activity we've had for the past 7 sessions, and now we are getting a true test of weekly kickoff high. Matter of fact, the overnight traded directly to it. There is a bullseye hit, 1835, weekly kickoff high, the overnight high. Buyers have, I would say, maintained volume on this move to the upside and added a bunch of open interest. New buyers coming in? We're going to find out, I guess. This weekly kickoff level is going to be pivotal. If the longer, stronger money decides to adjust inventory by reducing shorts or adding longs, we may see a breakout above this and a continuation. There's plenty of space up there for it. If the longer time frame decides to put their heels into the dirt and try and keep price lower and add to shorts or liquidate some longs, we could see this market head the other direction. Of course, these are always things that we're thinking about. So this weekly kickoff high is going to be somewhat pivotal. Unfortunately, the market had already reconciled overnight longs. The market really opening at settlement. Initially, the opening range was the low of the regular trading hours session. Of course, that's fallen now. It tends to do that when we open in value from the previous day and very close to settlement. So I'm going to try and stay patient. If I think that this market is going to continue the move to the upside, I'm going to look for short time frame levels with which to lean on to limit my risk. Case in point, yesterday's point of control. We've already tried to revisit it a couple of times. We've been unable to reach it. That's information. Value low from yesterday. Last week's high also interesting opportunity. We've got a little bit of a gap there, so we're going to be paying attention to that. And then, of course, we've got, whoops, that's not what I wanted. And, of course, we've got a naked point of control just down below that will be a visual target should the market head that way. It does not have to happen, but as we go through the weeks and we see how often the points of control are revisited, you're gonna love this. You're gonna love this. So we're gonna be keeping an eye on those points of control. We have one here that's yet really tested in the regular trading hour session. We're going to be patient, wait for opportunities here in gold. We've got the euro. Here's the daily. And where am I at here? I got to get my notes. Okay. We've had two probes below this kind of important inflection level that have both been rejected. We've got the regular trading hour session basically trading right back down to it within a tick of it. Last week's low supportive. Obviously the market is putting in lower lows. How good of a job is it doing getting there? Okay, we lost 2,600 in open interest. Perhaps some of the shorts kind of taking some profits from the move to the downside, but now it's got us back inside value. It's got us inside the weekly kickoff range. Yes, the euro does look a lot like GC. Hey, Ray, it's good to see you. And it has been. It's like what happens in gold happens in the euro. So, where was I? Ray, you broke my concentration. I got Lacey yelling at me because I'm not talking to her, and I haven't seen my friend Ray in a long time. It's good to see you, Ray. So open interest lower at the lows, volume pretty good on this stab to the downside, but kind of waning yesterday. Overnight a little bit short. Let's see where we're at now. So, yeah, we've got some overnight shorts. We've got a support level right here that, has been penetrated and now, again, rejected. So this is, I think there might be some fish down here. Don't be sorry, Ray. It's good to see you. Initially, again, the opening range was the low of the session. That has not held. The whole moving averages are indicating that the downside momentum is starting to fall off. This weekly kickoff level down here offers the opportunity to look for a long in a cheap way. We are going to, if we get down there again, we're going to have the opportunity to see if this is supportive, and if it gets too far through, we're going to be able to limit our risk that way. That's what I love about these levels. So, overnight a little short, no gap. We did not put any in, and we did not leave any kind of gap between yesterday's range and a lower range here. So I'm looking to start to think of trying to buy weakness as long as we can hold above weekly kickoff low here. And into the 10 years, go to the daily. I left everything on the 30. So again, this gentle upside slope seems to be gaining a little bit of momentum. Now, we had weekly kickoff in a level that brought in some volume. I don't remember if we boosted open interest on that day, but for whatever reasons, buyers came in and just scooped this thing up yesterday on lower volume, even lower open interest. We lost 23,000 approximately in open interest yesterday. Not necessarily that impressive for a continuation of the upside move, but the rates are what we're looking at, and with Powell talking and still speaking in a dovish tone, we're seeing rates continuing to slip to the downside, even probably as we speak. We were looking at the 10-year rate this morning at 1.32%, and hasn't been down there for a while. So Rates driving price, of course. Do we have a gap? We have a gap. We have naked point of control up here. What is that price? Let's call it 133 and 28 seconds. We got naked point of control here that was rechecked. The only other point of control is down here. We've got a gap open. If we can't close the gap, then we're going to be looking for opportunities to buy weakness and see a possible test up to this point of control up here. We've filled in this gap now in regular trading hours. We have been unable to return to yesterday's range. If this gap remains, look for opportunities to buy weakness to see this market continue to the upside. A gap close can also be supportive, but it just changes things a little bit. So we're going to be cautiously stalking opportunities like Ray, the lion, stands lying behind the weeds waiting for that wildebeest to come just a little bit too close to catch that dinner. All right. So if you were at group coaching yesterday, thanks for joining me. I think we had a really good and informative and helpful session. At least that's the goal. Looking forward to seeing everybody today doing well and having a good trading day. I think Dan will be available for the recap. If not, I will be there for you for the recap. And I got to do something about this thumbnail because it says recap when it's the forecast. So I'll work on that, and let's have a great trading day. Let's take our deep breath. Humble, grateful, and creative, and patient. Risk management, small risks, big rewards. Go find them, trade well.